Hello, this is Greg Hammer with Hammer Financial Group, and I'm going to talk a little bit today about the Tax Cuts and Jobs Act of 2018. This is what put our current IRS code in place and is what determines the taxes on your actual individual tax returns. A couple things that I want to mention about it. While it was put in place in 2018, it was not done as a permanent tax law change. It is actually scheduled to sunset in 2025. And what that basically means is we will revert back to the old tax code in 2026. So the reason we bring this up and the reason we want to talk about it is to talk about particular opportunities that exist under this current code that likely will go away in 2026. The first is how capital gains are treated, and specifically talking about long-term capital gains. Under the current Tax Cuts and Jobs Act, if your income is below the $89,250 on your tax return, any portion of that dollar amount that is long-term capital gains is currently taxed at 0%. Then this next huge window, all the way up to $553,000, that you see on the screen here, would be subject to only a 15% tax implication. And it's at that point that we would go back to the 20% long-term capital gains rate of the old tax code. So under the new code, there's a lot more room for potential tax planning, which we'll share again in just a few minutes in regards to the long-term capital gains. Similarly, if you look at this current tax table, it's what we call the standard rate table. And what it does is it shows us what portions of the taxable income, what percentage of taxation it's subject to. So after the standard deduction or itemized deduction that you might utilize on your tax return, the next $22,000 is subject to a 10% tax implication. And then you see the brackets go on here where the next set of income all the way up through the 22 to the 89,000 is subject to 12%. The 89 through 190,000 is subject to 22%, and upwards to $364,000, that's still within the 24% tax implication. Now, again, the reason I bring this up and want to communicate this to you is because once we revert back to the old tax code, which you see here on this current screen, the dollar amounts are going to be shrunk in terms of how the brackets are divided. In what is now 12% will switch to 15%. What is currently 22% and 24% will revert back down to the 25, 28, and 33% tax implications. So what we like to emphasize in planning with clients is moving forward, what are the things that we could do to take advantage of the current code and mitigate the potential increase in taxes when we see this code sunset. So if you're interested in finding out a little bit more about tax planning, a little bit more about how we can mitigate future tax burdens that your assets might have, and simply stated how you might be able to reduce the amount of taxes that you pay over your lifetime and into retirement, please contact us and we'll be happy to share ideas, thoughts, and concepts around tax planning and tax management. The contact information you see here, you can just simply call our office at 219-864-8266 and ask for my assistant, Jamie, or email our general email and somebody will get back to you and get a call scheduled where we can find out a little bit more about what your concerns are and see if there's things that we can help in addressing those concerns. Thank you for your time.